Everyone want to stick with us versus Herd. If it's your first time here, hit the subscribe button. If you want to get notifications for when we go live, tap the bell. We go live 30 minutes after my close, Monday through Friday. If you're not yet a member of our free options trading group or our Discord, links are below. If you're here right now, say what up. See a bunch of people in here. Carmine, Keith, Alex, Crypto Slice, Linda, Jack, William, Ben, Joshua, Eamon. I think I got it right this time. Eamon. Billy, Rayleigh. Let me know if I got that right, man. Ben. Glad you're all here. Nice to see you all again. Another day. Antonio. Another day in the stock market. Dow is down 650. S&P's down 60. NASDAQ down 200. Tobin, what's up? Ahmed. Yeah, what a day. Yeah, I mean, that was crazy. Tony, if it's your first time here, say what up. Definitely want to meet you. Tony, how you doing? Welcome to the UVH fam. A few small profits took a little away from my starting red. Yeah, Linda, I was up pretty nice this morning, and then I gave it back. That's Rick. What's going on? What up, what up? First time here. Welcome to the UVH fam. Glad you're here. Nice to have you. Nice to have you on the live stream. Nice to have you trading with us. I should stop drinking as much Coke as I do. Anyways. I was way down. Now I'm less down by a few dollars. So I'm glad to hear. Glad to hear. I mean, we're just starting the year off. So today I was probably a little bit more aggressive than I wanted to be. Well, I chose to be. But probably shouldn't have. You know, now, obviously in hindsight, shouldn't have been that aggressive. Hamed's drinking Coke Zero. Carmine, oddly enough, I got paid. Don't say oddly enough. Any lessons you can share from today? Yes, we're gonna go through some lessons. Made some mistakes today. We made some mistakes today. And nothing crazy, but things like the mistakes that you make in the market. Yes, they could be huge mistakes that cost you a lot. There could be small mistakes that are just kind of reminders, or they could just be somewhere kind of in the middle where it's like, well, that sucked, but you're not going to lose any sleep over it. And that's kind of where I'm at today, is where, well, you know, it sucks, but I'm not going to lose any sleep over it. I see it going down more tomorrow. I say that because I got mostly bearish position. Yeah. So today, to kind of recap, today I'm down $27.50 per account. So I'm down about $100 on the day across my 4 accounts. At one point in the day, I was up over $100, and most of it being down is because of BABA and Apple. Apple being the number one reason why I lost today. Made some good money in Microsoft. We made some money on IBM. As you can see here, we took some profits. I'll cover my GLD position. GLD, I did take a $12 profit on the calls, but we're gonna lose on the put side, so that's still gonna be down $60, $63, somewhere around there. Wally, Happy New Year. IBM kind of did a different tricky trade. If you guys aren't a member of our Facebook group or our Discord, I did post my trades in there today. We did do, let's see how many trades I do today. We did we did about 8 trades today, and I did some things that I normally don't do, and the reason why I did them is because on like the strangles. So on strangles, we'll go through these orders here. On let's go to today. I was doing some math there on GLD. So these were my trades today. I have the same trades across all my accounts here, but these are the trades I did today. Microsoft, we took in some profits about 20 minutes into open. We'll actually open up that trade right here just so you guys can see what we did here. I'm using Tastyworks for the orders because the numbers and lettering are a lot bigger than Thinkorswim, but I do use the charts in Thinkorswim. So, but they're the same trades. So yesterday I opened a position on Microsoft for $1.28. I had the 100 put, the 103 call. I closed it out this morning about 25 minutes after market open at $1.92. So we made $64 there. Not bad. Definitely could have made more, but glad we booked the profits and moved them on out. Because as you could easily lose profits, and especially these are expiring tomorrow, so you gotta be very careful. I then rolled those profits. I took those profits here and I started buying the 150 calls on Apple, and that's when things kind of started going sideways. Started off today as a good note. I closed my first trade of 2019. I closed it out green, positive, and then things kind of started going downhill when I placed the Apple position, as you know. So Apple, I thought we were going to have, as you guys know, Apple. Tim Cook put out a investor letter last night. Actually, while I was streaming live, and I was trying to do my rant yesterday, trying to do my motivational speech, and all you guys were talking about was Apple, and which is fine. But what happened is Tim Cook put out an investor letter to kind of sum up guidance and Q1 and what he thinks, and and it wasn't good. It was not good. I mean, they had their worst day in 6 years. It was terrible. Richard, thank you for the $20. Thank you so much, man. Thank you so much. Greg, what's going on? Kit, Manny got paid. Oh, I forgot to say, if you made money today, comment got paid. If you lost money today, comment learn a lesson. When we lose, we take those losses as a lesson, so that way we can gain in the future. You just don't take the L and don't learn anything from it. So I was playing Apple. Oh man. Sorry, things are kind of freezing up over here. Come on. Swinging down, just haven't lost yet. Okay. Hold on. We're having some issues here. We're having some technical difficulties. Okay. Doing better. Had to close out Microsoft Outlook because that pig is just draining my Mac right now. And I actually have my new custom PC that I built still sitting in the freaking box. William, up today, made back most of my losses from yesterday. I'm just down, haven't lost yet, haven't realized it. Where are the calls? So Apple. So when things started going sideways, I bought Apple. Micah, what's going on? I started buying the 150 calls. We're looking for a bounce back here. What time did I buy those? At 8:57. So at 8:57 in here. So I started buying it when Apple wasn't moving at all, thinking that we were going to get some sort of bounce back, and then we had a little bit of a drop afterwards, but then it led to a 4-point run. So what hit 142 went up to 146. Crypto Slice, thanks for the $10, man. Appreciate it. Thank you. We went from 142 all the way up to 146, which obviously didn't put a dent in from where it's dropped. We closed down almost 10%, 9.96% on Apple today. So I thought we were gonna have a little bit of a recovery. I wasn't looking for it to hit 150. I was just looking for a little run up. And then when we came back down in Apple, I averaged down my position at 10. So at 857, I put the position on, and then an hour later I averaged down. I was down 50%. So then I actually came back after after that, after I was down 50% on it, it came back. I was actually break even or up $20. I even went up to like up $20 on the trade, and then it just kind of gave it all back. So now we're sitting at, that's why we're sitting at, you know, down 70 or 80 on the day. And as you can see, there's differences. Even though these are the same positions, you can see on here Apple down 80, but on Thinkorswim saying down 70. So, you know, when you're trading across different platforms like that, there's the, you know, they definitely calculate things differently a little bit. So, you know, Apple just kind of returned back down to the lows of where it was. It did break down to 142, but really since it opened, it really didn't. I mean, it went lower, but not much lower. I mean, at open, in the 15-minute candle, it touched 142.83, 142.85, and it closed at 142.19. So, you know, if you bought kind of like what we did, we bought at open and it didn't move all day, and that's where, you know, probably should have closed it out for a small win, even though you think it's going to move more, instead of giving it all back. But that also this is kind of a good example as well. Looks a little choppy right now. I definitely apologize, guys. I'm going to be swapping out this Mac soon. I'm just trying to figure out the right setup here. Because I got this PC here, but anyways, Apple, you know, this kind of shows you how strong theta and everything is. Let's take a look at those 150 calls actually on Apple. Let's show you some price action. Okay, streaming fine over 4G on my phone. Man, look at this. This is a mess. Apple's trying to crash my computer. Anyways, so if you look at these, obviously, you know, these were worth not, you know, $8 to $9 yesterday, and then we had the big down move. So let's just zoom in on today, just so we can actually see what happened here. Because when you have big move like this, it's hard to see. Come on, just show me. Okay, here's a better chart. Okay, so kind of show you some examples. So when I bought the position, I bought it about right in here. You know, I bought the original position. Let's get this going here. I bought the original position for 30 cents, and then actually on Thinkorswim I got a little bit better price on the second position. I got 14 cents. So I bought it right in here when it was 30 cents. So I bought it right here at the top of this ticker here. It then came down all the way down to 15, 14 cents. I then averaged in some more, and then it came back, and I was actually profitable on the position, and then we gave it all back and then some. So this kind of shows you how strong, you know, theta is, and deltas and all that when you're this close to expiration. How quickly you could lose. Now delta's 3, but at the time it was like 10. But just to give you an example of how quickly, once that position, when you're this close to expiration, tomorrow's expiration for these options, how close, you know, it went from, you know, 20 cents down to 5 cents within an hour. You know, 20 cents to 5 cents within an hour. And you can see here, it didn't really move. I mean, it did move. It did move down a little bit, but nothing crazy, as you can see. It didn't go like nuts. But, you know, tomorrow's expiration, and then you pay for that. So, you know, knowing that, definitely I should have been more careful with this. You know, I should have been more careful. Like I said yesterday on the live stream, I'm going to be looking at doing more day trades, and I probably should have locked this in as a day trade. I probably should have been more careful. I even told people in Discord that I was actually going to close it out today. But then when it got down to 5 cents, I was like, well, what's the point of closing out? You know, if we have an update tomorrow, you know, we can come back. So I should have averaged down and then sold it. You know, when it returned back to 30 cents, should have got out, or even like 25, 27 cents should have got out, because that was the last ditch effort for today, you know, to get out of this position. So, you know, for who was asking who was asking if I learned any lessons today? That was definitely one of them. When you're day trading this kind of market and this kind of movement, you got to take profits quicker, because as you can see, it went up really fast, but it also goes down really fast as well. So, just to give you some context right there on a trade that kind of went against me. IBM. So IBM was a little bit of a trickier trade. Let's focus in on IBM. So yesterday I opened an IBM position on for this week's expiration. I put a strangle. I bought the 114 put, and I got the 116 calls. And as you guys know, I paid $1.42. As you guys know here, IBM went down just like the rest of the market. But the reason why I sold it was it kept knocking on 113's door here. It kept knocking on 113's door, and it was just not going down. So I had the 114 put. Once it was doing that, and I did something that I really do. I broke apart my strangle. And the reason for that is because I felt like because it kept hitting this and not going down, it could shoot right back up to the highs yesterday. So highs yesterday was like 115.90. It did touch 116 after hours, and so I was like, okay, I will sell my put, which was the right move because it took all day to get back down there. So I sold my put for $1.32. So I paid $1.42, and I got $1.32 back. So I only had $10 worth of risk into the market. I wasn't making any more money on my put. So I took it off. I collected the $1.32 credit, and then I bought two more 116 calls for 16 cents. Cost me $32. So then I'm now holding, as you can see here on IBM, instead of one, I'm now holding 3 calls for 116. So I was hoping that we would get a bit of a bounce and we could get up there, but we got rejected just like the rest of like Apple and well, actually Apple and Microsoft. They were pretty much, if you're looking at IBM here and then you're looking at this Microsoft chart, pretty much the same thing. Sell off, ripped up, and then we just sold off all the rest of the day. There was just no buyers the whole rest of the afternoon. So just straight on selling. It was slow and low. It was very painful. It was like a very slow bleed, but either way, we still ended up lower. So now we're down on that position. So we're down $85 on this. So let's see here. Let's do the math here. Let's do the math real quick. So I had $1.42. I got $1.32 back. So then I had $10 of the risk, $10 plus the $32. Let's see here, 10. So I had $10 after these two trades here. I only had $10 of the risk in the market. I paid $1.42, got back $1.32. I only had 10, so $10 plus 16 times 2, $32. So really, I'm down 85 on the calls, but it's not calculating that I brought in this money. So I have $42 worth of risk per account, essentially. So how I got that, $1.42 minus $1.32, so that's $10. So I had $10 difference there on my original position because I was up on the calls, because you see I was up on the puts. As you can see, I collected $58 on the puts. So I'm down. If this position goes completely to zero, I'll be down $42 on it, not 85. So, and let's see if that's let's see, it's saying 85, 105. Let's see the difference in Thinkorswim here, because I think there's a difference here. Yeah, look at this. This is very strange. So Tastyworks is saying I'm down 105 on this on the day. I don't think Tastyworks takes my average in like Thinkorswim does. This is very interesting. Is the P&L day here saying negative 105, but on here it's taking my average in and saying on P&L day I'm only down $8. However, P&L open I'm down 84. I'm down 85 here, which is the same. So P&L open down 85, down 84 here, but P&L day saying I'm down 8, and over here I'm saying I'm down 105. So I think Tastyworks is not taking my new average in for being down on those calls. So my new average should be, you guys can't see that. My new average for these calls here is 33 cents. It's not 67 cents. You know, I originally bought it at 67 cents, then I bought 2 more at 16 cents, so my new average is 33 cents. So, you know, when it came back to the 30s there, I should have closed it out. End of story. Been more disciplined, not wait for it to run up, but you know, when a stock's down, like Apple, like down like 10%, 8%, you think that it's going to recover back up to 5% or 4%, which it had, like stocks like that have done many times when Netflix was down or other stocks were down. It does, so it kind of plays with you a little bit, you know. But you should keep that out of it and just trade on discipline. So I don't think Tastyworks is not calculating that P&L day correctly, saying down 105. Here it's down 8. Because I've already collected profits from the puts. Then, what did we do? Then on Alibaba, I wanted to wait till towards the end of the day because I wanted to do something that would weigh out. So since I closed out all my short positions, I only had calls on Apple and IBM, which made me feel very uncomfortable. If we had a down move tomorrow, you know, obviously we're going to kiss those goodbye. So what I did was then I opened a strangle. However, it was a bullish strangle on Alibaba. And the reason why I opened a bullish strangle on Alibaba is, let's zero in down here. The last 2 times it's come down to this 129, 130 area, it's bounced pretty big. So we went from 129 up to like 142 in a day. The last time here was about a week ago or so. Went from 129.77 and went all the way up to 138-ish area. You know, these are huge percentage swings here, huge dollar swings here. So even though my portfolio needed to be bearish, I still added a bullish position on here with protection. So I have the 126. I have the 126 put and the 132 call for tomorrow expiration. Kind of a risky play, but as you can see here, we're skewed to the bullish side. But then when it looked like today Alibaba wanted to go down some more, so I'll pull this up down here. When it didn't look like it wanted to recover, kept knocking on a 129. You know, I thought that maybe it was going to break through. You know, to protect myself, I then bought another put at 126, so that way it goes down. If it goes down, if tomorrow the market goes down, I'm protected. I will cash in those 126 puts. If we go up tomorrow, I have calls, a bullish position on Alibaba, I have a bullish position on Apple, I have a bullish position on IBM. So I wanted to, like, when the market moves, I want to get at least something back, or at least be back to break even if it doesn't do what I wanted it to do, you know. So on Alibaba, that's what I did. And the thing is, I was if you're looking at these positions here and you're looking at my deltas, you know, this is still delta positive. I was up like 30 deltas on my overall account. I was up 30 deltas, and I'm actually still up 29 delta, it looks like. But my Baba before I added that trade, I was up a lot more, and then I neutralized Alibaba when I added this, and then it didn't start coming back until, you know, I'm positive 8 on Alibaba, but it was up like 30 to 40 on the deltas for Alibaba. So I wanted to get more neutral, so I added one more put to that. So now it's weighted correctly. Now it's more like delta neutral instead of leaning towards one side. However, my portfolio overall is still bullish because I cut my puts that were worth anything today, and then I layered in another Alibaba bullish strangle you know, what are you going to do? Also, it's weighted a little bit more because I'm also holding on Apple. I have, let's see here, in Apple I have 4 calls on each account, and IBM I have 3 calls on each account. So that's why it's weighted a little bit more there on the deltas. You know, going into tomorrow, I think it's definitely going to be interesting. I think that, you know, obviously, depending if the market's going up or down, I'm going to be looking. If the market's going down, I'm going to be looking to cut my BABA position. If the market goes up, I'm going to have a little bit more work to do because I'm going to have to cut BABA. I have to cut IBM. I'm going to have to cut Apple if we have an up day. Mike Matthews here. Good info as usual. Love the group too. Will be interesting to see where we go. Made 500 from Apple today. Nice, Mike. Good job. Made $500. The only bullish position I would trade at the moment are DIA, Apple. Everything else is a hold until it reverses. Yeah. The other thing I think was hard as well is tomorrow Powell's going to make a speech of the Fed, and actually right now, right before I got on, what happened? Right before I got on, it says Trump talks to media in surprise briefing after Democrats take control of House. President Donald Trump on Thursday led a surprise briefing, you know, right before I got on the stream. Right now he's having a surprise briefing with who knows what's going on with that. The surprise briefing came hours after a swearing-in ceremony for new members of Congress where Democrats took a majority in the House. It also came as the partial shutdown of the federal government dragged into its 13th day. So, you know, it's hard to trade. It's hard to trade when we're very politically driven right now. It's not being based on technicals. It's not being based on, you know, if a company makes a lot of money or profit or losses or whatever. You know, a lot of the things that are going on right now are political. I mean, right now the government is still shut down. They're trying to secure the funding for the border. We're still in a trade war with China. You know, what else? Add it up. You know, it makes it hard. And then tomorrow we have the Fed speech, I think at what, like 10 a.m., 10:15. If anybody knows, correct me if I'm wrong. I think it's like 10:15 Eastern, somewhere around there. It's in the morning, I know, where Powell will be talking about the economy and kind of what his thoughts. Trump's briefing was about pushing for funding for the wall. He made a brief speech, then walked out without answering questions. Sounds about right. You know, on a day that the Dow is down 600-700 points, I mean, I don't think he was in the mood. But in terms of Apple, you know, I'll kind of give you, you know, Apple right now. Daniel, what's going on? Apple today posted a 52-week low. It's not a 2-year low or a multi-year low yet. I mean, 2 years ago we were at 114.76. So I mean, if we have down moves, I mean, it does look like Apple. There is some support. There's some decent consolidation around like 140, 139, 138 to 140. So like 138 to 140 looks like there's some decent consolidation here. So it might be tough to break that, but at the same time, down in here, Apple was posting, you know, pretty good results, as you can see here. You know, right here, earnings were up, here earnings were up, and now if Apple needs to surprise people with their earnings for them to continue the trend. I mean, we were at 233 a few months ago. Now we're at 142, but I mean, to be honest, I mean, this was probably a bit overdone. I mean, obviously, you know, and we were talking about in the Discord today, I mean, you're delusional to think that if we can go up 50% or up 100%, we can have a 50% down year. You know, obviously, obviously we're not going to go down 100% because that would be zero. You know what I mean? Like, but we can go down 50%, which, I mean, you know, we go down to $100, go to $114. That's 50% cut right there on Apple. And maybe it was overdue. Maybe they needed it. You know, Apple still makes money. They have a lot of services. People still buy a lot of their phones. They're just talking about, like, when they put out guidance. Obviously, when you're investing, when you're a shareholder, you're not investing for today. You're investing for the future. You're investing for next year, 5 years from now, 10 years from now. IV and GLDs are ridiculously cheap. Yeah, GLD. I actually had a trade in there too that I took off. GLD. Let's go into GLD. GLD. I've been bag holding for a few weeks here. GLD. I put on a strangle. It was a bearish strangle, so that's and it took a really long time to get to where I wanted to go because now it's expiring. So on December 20th, so we're at 2 weeks ago, I put on a bearish strangle at GLD. I forgot to talk about this. I bought the 119 put, the 122 call. It was. Let's go to the 1 year here. Was when we went up to right here. So on the 20th, this day right here. So we went. Let's zoom in on this. So when we gapped, went from 117 and 118 all the way up to like 119. I put on a bear strangle. I bought the 119 put and the 122 call. And the 122 call was more for protection. Bought it for $1.07. Obviously, that 122 call was breached, and it was breached just today. But as you know, it expires tomorrow, so you know the theta burn definitely let this one eat away. So I did close this out for 44 cents, but I'm still gonna lose. I'm still gonna lose on this position. So, you know, we made some money on the call, but doesn't matter. You have to make money on the entire position. So 107 minus 44. So yeah, I'm gonna lose $63 on this. So 107 minus 44. So I got 44 back out of the 107. Not great. So the one thing that I don't like about GLD is just kind of slow compared to like tech stocks and some of the other stocks I'm used to trading. And maybe I had the wrong position on it. Maybe I didn't have the right expiration. Maybe could have been a lot of things. But either way, what I do know from trading that, it was very slow. It was very slow. I mean, yes, it did go to where we want to go. It did get up here. I mean, it did up to 122. I did want it to go lower. You know, I was looking for a return. After hitting 119, I was actually looking for, you know, 118, 117 area, 116. But that's why I had some protection. So luckily, I got some money back. I mean, luckily I got $44 back, you know, out of the 107. But we were still going to lose $66 on it. So we didn't get back. So I tell you guys, when I put a strangle on, you know, when a strangle goes against me, my goal is to get back to break even, and we did not get back to break even. We got back like 50%, 40%. So not great. So I do agree with you. Premium is cheap in here. It just takes a very long time to go, and maybe I don't have the patience for it. Maybe GLD is not really a stock that I'm good at trading. Maybe it could be a lot of things. But I do know for a fact it did not make money on it. It did cost me money. It took a long time for it to exit. It was actually down more on the position up until today, since we had this. You know, yesterday I was down more. How much did we get back today? Let's see. Will it show me? We got back $16. So I was down more yesterday, and we got some back, so I took it. You know. So, because it expires tomorrow, I know that if it goes down tomorrow, then we're gonna lose. We're gonna lose that $44 that I received today. We're gonna lose that. Obviously, when I closed it at when GLD was like 122.05, and it's still going a little bit higher, mostly due to the down moves in the market. So I don't know if I'll be trading GLD again. But enough about me. What tickers are you guys looking at? What are you guys trading? Let me know. Interestingly enough, Netflix closed green today. So tomorrow, I did say in Discord, I will be looking at day trading possibly Amazon, Netflix, and I already have a BABA trade. I was going to do a BABA trade, but you know. But interestingly enough, Netflix just kind of powered through the day. Didn't care about anybody's feelings. And, you know, it did hit some pre-market lows, 259. But if you look at this, 259 all the way up to 275, obviously it kind of triple topped here at like the 275 area. But if you're looking at Netflix, Daniel AMD, I'll take a look at that. You know, if you're looking at Netflix, it's trying to hit back up to 280. But 280, there was definitely some resistance here. So I don't know if there's going to be enough juice in it. Might be a good day trade tomorrow. Maybe. You know, we'll see. But it's definitely on my day trade list for tomorrow. AMD, you know, honestly, like for me, AMD hasn't really been a trade ever since we kind of came back down into the teens, just because it's just really slow and hasn't been moving a lot. Let's see, today had a 9.45% down move. Let's see what these puts were worth. Actually, they were actually up pretty good. So the market was not expecting the down move. That means, so these were up like 800%, 700%, 400%. So the market was not expecting the down move. But, you know, down here at like 16, definitely likes to bounce at 16. Looks like some decent support here at 16 as well. So it's hard, but it's also like, for me, like a trade like this is hard when the market's going down like this and the market doesn't look healthy. But obviously, a lot of these stocks like BABA or AMD are resting on these areas of support. It's like, well, do you want to go bullish and it goes down like that's the day it goes down to 14, or do you want to be bearish? But because of these key levels of support are strong, it kind of bucks the trend like Netflix did today. It bucks the trend of the market, which could very well happen. The one thing that I do like about today in terms of the market is, you know, over the last few weeks, especially around the holidays, all the stocks were basically mimicking the indexes. So the S&Ps, SPY, all the charts look the same. You could look up Apple, you could look up BABA, you could look up Microsoft, you could look up Tesla, you could look up all these stocks. They all mimic the same graph. And today, some of those broke. So I do like that aspect. Twitter, it's been a long time since I traded Twitter. Twitter was really good to me in 2017. In 2018, I did make some money on it a little bit, but I didn't really actively trade it. You know, if we're looking here again, like, I don't really like when it's sitting in this range. You know, it was in this range like 32 to 36 for a while, but now it's back in this very tight range at like 27 to 30, 27 to 30. Yes, you can make a couple quick bucks in there, but if you're looking at it right here, it could stay there for a long time. Like, it stayed in this range for a whole month right here. Back in here, it stayed in here for almost a whole month until it kind of broke out. Had the next you know, it finally pushed up. But, you know, I know from experience for trading Twitter, you know, you definitely want to buy in here, especially when IV gets crushed like it's been getting crushed in here, because when a stock stays the same price for a long time, IV gets crushed. The price, implied volatility goes down, obviously, because there's no volatility. If the stock price stays the same, there's no volatility. The price is just staying stagnant. So the option prices get cheaper. However, you can't always gauge how long it's going to be in that zone. Like in this zone here from September 7th all the way to October 24th. So almost 2 months. It stayed in the same range and people weren't making a whole lot of money. Yes, you made some money. Definitely made some money in this drop. Probably made some money on this rip up. But, you know, if you were holding, so I know for a fact, like, the ways that I made money in Twitter was buying options when they were cheap. But I was buying stuff like 6 months to 9 months down the line, and then I started to make money with it. Day trading it, I mean, it gets tough. I mean, you could have definitely traded this today. We were talking about this earlier today as well, that, you know, it's very hard to trade a stock like this. You know, it goes up from 29. Goes all the way down to 27. Like, day trading this is very difficult because this happens really quick. Yes, you can book quick profits, but nobody's really that great at timing it. Like, no one's going to be timing it that correctly. You know, on a upswing this strong in the first 15 minutes, people were probably trying to buy, and then they got screwed. You know, they were trying to buy calls or stock or whatever, got screwed. You know, and then they started to short it. They started to short it right here. People were, people were starting to short it. Then they saw it go against them, probably booked some losses, and then it came back down. So, it's not like this is not a very good day trading chart. It's definitely very difficult. The one day trading chart that I was saying that was, if you're looking at a day trading chart that's a lot easier to read is this chart right here. If you're looking at more of a day trading chart, where it fails at a certain point of resistance, but also catches at certain points of support. So, it's dipped down here in the 80s, 2480s was bought up. Obviously, this was bullish because the lows were higher. So this low down here, and then this low down here is higher, and then this low down here is higher. So this is more of a bullish day trading chart. But obviously, both bulls and bears can make money on this. Like, I'm not saying they made money on it easily, but this chart there's a lot. If you compare them, and you look at today's chart on Twitter, if you're going to day trade, which one would you choose if you're going to day trade a chart? So, if you're day trading this chart would be my preference. I mean, some people, everyone is different in terms of what they prefer. I find I trade the charts that I'm more successful at making money at. Your charts may be something different, but I can tell you there's a lot of emotion and a lot of traps in this chart. Here, it relies on more technicals, where you're focusing on support and resistance, and in this case it worked out pretty much perfectly. In this, you're just kind of hoping for the best, if that makes sense. Long Netflix for earnings. David, I think for earnings, I've been more successful trading earnings afterwards than I have beforehand. If I am going to trade earnings, I probably, like beforehand, I would probably rather sell premium. It just because when you trade earnings before the report comes out, there's a lot of things like I told you guys many times, and if you're new here, I'll say this again. Before I place a trade, I think of all the ways that I can get screwed on this trade. Okay, so I started to run the scenarios. Okay, how can I lose money on this trade? If I place this trade right now, where can the market get me? And if the odds start to stack up too much, I tend to kind of not do it or like minimize my risk on that position. In the case of earnings, in the earnings report, they could say anything. They could say, "Hey, we beat revenue, we beat sales, we broke gross profit was great." We signed up more subscribers. Everything is looking good. And then they get to the conference call or whatever. They say, well, but the next quarter is not looking so hot, so we're going to lower guidance. Or they might have, forgot to tell you guys during the conference call, there's some litigation issue we got going on. Not a big deal, but the SEC is kind of knocking on our door for something. Stuff like that. Stuff like that happens more common than you think. So you got to be very careful. Also, before earnings, implied volatility, IVD is very high. Yes, the stock could move a lot, or it could also not move a lot at all. So if you're buying options at a very expensive price, so when premium is super high during earnings, and the stock doesn't move at all, which it does happen a lot of times, if the stock doesn't move at all during earnings, especially after major selling off, like Netflix has sold off quite a bit. Apple sold off quite a bit, and their earnings, it may just do nothing. Like there's been earnings seasons where the stock does nothing and it just sits there, which is great for an iron condor. But if you're buying premium, you're gonna get axed hard. You're gonna be down 80, 90% instantly within less than 24 hours, just based on one report. So, for me, if I was gonna do anything before, I would probably sell premium, and then I would day trade it the next day. I'm looking forward to this earnings season. I definitely think we'll be making more money, but I find that I make more money day trading those stocks that move big. The stocks, like let's say Netflix has their earnings report, doesn't move anything, it doesn't move all day, then it's not a good day trade. But if there's a stock that moves big, that's down 10%, more than 5%, I definitely puts it on my radar. Long is in shorting puts. Yeah, I mean, you can do a vertical put spread, or I think in this market right now you want to be very careful about selling naked puts. Yes, I know technically it's defined risk, but you can hurt your account really bad right now. I mean, if you sold naked puts, 423 to 271, I mean, you're sitting on some tough losses. Yeah, one way for earnings is buying in advance, selling. Yeah, kind of. Yeah, some stocks, if you know that, like maybe Netflix runs up before earnings. So looking at this chart, we had some selling off here, and here you can't see that. Hold on. Here was the earnings report. So you could have bought the dip here and sold before earnings. Yes, you would have made more money, but also you would have made some money just having this nice little run up. As you can see here, before earnings on this event, it actually sold off before earnings and then went back up. So it doesn't you can do it. This just doesn't work every time. Down here, we had a ramp up before earnings, then we had a gap up. Here, had a dip before earnings, and then we ramped up before earnings, and then in here, it actually went up before earnings before actually going lower. So you just gotta look at the trends, see what the stock did before. As you can tell with Netflix, it kind of just does what it wants. Like it kind of goes like the market was down really bad. We were deep red today, and this thing closed up 1.5% almost. So you just gotta be careful. And if you're trading directional, you gotta just make sure you hedge yourself or pair it with something else. As you guys probably can tell from my trades, is I pair a lot of things together. If things like I'll put a trade on, if it starts going against me, I'll kind of add like Lego block, construct it into something else. Today I would say I was probably a bit more aggressive on averaging down like my Apple calls. I probably should have just let it run and not gotten that big of a position on Apple. Probably should have cut the calls on IBM when we had the bounce on IBM, but should have done a lot of things. Today's chart was definitely tough. I would definitely say this. It was definitely a short the rip kind of day. And it came up to 115. IBM came up to like almost 115, and before it sold off and closed at 112, 191. Jeff says some info on the Powell speech. He's speaking at the American Economic Association in the panel with his best friends Janet Yellen, Ben Bernanke tomorrow, 10:15 to 12:15. So the one thing. So that's 2 hours. The one thing that's kind of scary that it's so long. I don't necessarily like that it's so long. Is that the market for 2 hours could sit still and wait for something to happen. Like they're on the edge of their seat. Like I'm waiting for him to go, and maybe he doesn't say anything that's really relates to. I mean, obviously he'll probably say something that relates to the market, but that's a 2 hour window. That's kind of like in the back of your mind, kind of like, well, anything could happen. He could say this, he could say this, he could not say this, So that's why you got to be careful. So tomorrow could actually be a flat day, waiting for the Fed to say something, or it's speculation. Options are speculation. We were actually talking about this today as well. Options are speculation. So, are people speculating? That's where you get calls and puts kind of skewed, where the puts skewed or the calls skewed. Which one's more expensive? And I think tomorrow was pretty evenly priced in terms of puts and calls. So I think the market's very mixed. The market's 50-50 right now. They don't know if it's going to go up or down. Hope they say something in the first half hour. Yeah, agreed. Hopefully they get it over with. It's the worst thing. The worst thing is like in the markets right now is when like Trump tweets is like, hey, I'll be speaking this afternoon. I'm gonna have a press conference this afternoon. He's done this quite a few times. I'm gonna talk to the press this afternoon. He doesn't say what time. There's nothing scheduled. Blah blah blah. We get to the afternoon. People are waiting all day. Never shows. so it's kind of like that. So you don't want to get too aggressive. You don't want to get too crazy. It's Friday, Expiration Friday as well. Richard at Crypto Slice, again, thank you so much for your donations. You guys we have about 10 minutes left in the stream. You guys got any other stocks you want to look at while we're on the stream? Definitely want to take some questions. If you have questions, if you're new here, say what up. Want to meet you. Welcome you to the UVH fam. We have a great group of people. Join our groups. Everyone's so supportive and answering questions, and no question's a dumb question. We're all in this together. We all make mistakes. Like, some people made more money than me today. Some people lost more money than me today. And that's just the way it is. That's the market. Crypto Slice. Okay. Dow Jones Industrial Average. Yeah, I mean, I would say right now, like, most charts are looking pretty ugly. I mean, we had what? Let's see here. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 10. We had 10 red days before we had one green day. And the green days, yes, the green days were strong, but not that strong. Now we're kind of giving it back. We could easily, crypto is kind of like what I was talking about with the Fed and what's going on with the policies. We could easily revisit 216, and we might even revisit 216 tomorrow. And today is pretty much the same story. We had the dip, the rip, and the fade. Same story, down 2%. It's very tough right now to see where we're going in the markets. We came down a lot. People are saying, this is where value investors come in. They're like, oh yeah, there's some good deals in the market, but is it really a good deal? Is it? I mean, how many people are going to go out of business over this? How many unicorns are going to go out of business or not get funding? And if you look here, we're not even at where we were in January 1st, 2017. It was 198. So this could easily give back all the 2017 gains. We were right on 2018. We're in 2019 now. We could definitely give up more years. So, I mean, I definitely could see, like, I'm looking at on the S&Ps, Crypto Slice, I'm looking at the S&Ps myself personally, is that, let's go back here. This is the same chart as DIA pretty much. Retouched it down to the 2350 area, and we did call this out like weeks ago, where we were saying that if it breaks 2600, most likely going to retrace 24 to 2350 area, and which it did, which I didn't think it was going to get there that quick. But if you're looking back here, I mean, we have some support back in the 2350 area. I mean, I wouldn't say like super solid support, but this will probably look the same for DIA. They pretty much mimic each other. Down here, 2350 area, so pretty decent support. And then we had the bounce here just recently, a couple days ago, the bounce at 2350. And if it fails, we're definitely going to retouch. So basically the same as DIA. 2216 is the same as 2350 for the S&P. So, I'm looking for a retouch here. If tomorrow's red as well and we break below, we're heading closer to 2400, I'll definitely be looking for a retouch of the 2350 area. A retracement. Manny, UPS and Hamed got MU and Square, so let's talk about that. UPS, I think it's all going to depend. It's pretty much mimicking the market. As you can just see, this is pretty much mimicking, this down move was the same move that we just saw on DIA and the S&Ps, down move and went up, and now we're headed back down. You just got to be careful. I don't know when they have earnings. We can look here. See, UPS. Okay, UPS has earnings. So that's the other thing. UPS's earnings January 31st. A lot of people have earnings in January, coming up in a couple weeks, and early February. A lot of big companies. and they're going to be reporting their Christmas sales. UPS is going to be reporting their Christmas sales or their numbers, and spending probably was up because we've had some. Amazon said spending was up. We have some indicators that spending was up over the holiday season, but we don't know how that translates into UPS. Was UPS busier, or was like Amazon delivering their own packages? You know. So for UPS, I would say there's a lot of unknowns. I mean, they rely a lot on the holiday shipments. And if Amazon is taking away some of that, they're going to have some trouble. And their stock price is definitely reflecting, pretty poor performance over the last year. 135 is now 94, and it went under 90 a couple days ago. So, MU, Micron's just been slow and low, trending lower. Ahmed, we're let's see here. Pretty much every stock we got to look at the multi-year now. Yeah, I mean it's back down here at support. Are we going to get a bounce like we did back in here? But if you're looking back on the support, it actually broke lower before heading higher. I think right now, all stocks, we need some sort of catalyst to move us higher, and we don't have a catalyst. Like, there's no catalyst to move us higher. Square, I can't believe it's in the 50s again, but at the same time, you can. I mean, 2 years ago, it was $13. It went all the way up to 101. Humongous run. But we've been downtrending since September. I think this stock Square. I was actually a stockholder, but I sold my shares a few months ago. My average was like 30, but I think Square is one of those companies that just went up too fast, too fast. Like, it went from $35 up to 101 in a year. Excellent. How you doing? So you just gotta be careful about it. I mean, this downtrend, as you can see, if we're looking at the 1 year, the highs are getting lower. So just be careful. It needs to break out. If you want to see bullish uptrend, it needs to break above these highs. And as you can see, the highs that we reached the top of 101.15. This high was then $83. This high is now $73. Is this high here? Is this going to be a high here? Are we going to go lower? Are we going to go down to the 40s? Are we going to be the next high here? It's going to be $57. So it's got to buck the trend. Otherwise, it's going to keep going lower. It needs a catalyst. Like, it needs something. So at this point, it can't be saved until it starts breaking. And I think the highs right now are too high. Like 52 to 70. Yes, it can. It went from 55 to 73. But as you can see, it's getting weaker and weaker and weaker. So it's still heading lower. But there's opportunity there. The one thing about Square, though, the premium is for a $50 stock, that thing's rich. That thing's loaded. But it does move. It does move. I mean, today, let's see here. It moved 8% today. Let's see what the market was expecting on these options. Okay, so the market wasn't really expecting that kind of move. 400 or 500%. Pretty good for Square. Normally, premium is priced pretty rich, and you wouldn't get these kind of returns. But it seems like they were under pricing it. I bet they were only pricing in like a $2 move, and then it moved almost $5. So, how was my New Year's? It was pretty good. It's pretty good. Excellent. If you missed the stream from yesterday, I definitely would encourage you to watch it. I went over my New Year's and also had, and anybody that's here, if you missed the stream from yesterday, I think it was one of my better streams. I went over kind of where I want to go this year. It was more motivational. We didn't talk a lot about like individual stocks like we are now, but it was more motivational. It was kind of an overview of my personal life, kind of where I've been, where I am now, where I want to go. In terms of life and options trading and just in general. So, if that was something, there was a lot of people here had a lot of good comments about it. So I think it was definitely good. It also felt good to kind of vent that out as well. Couple more minutes. If this video was of value to you, hit the like button. I mean, I'm super encouraged by all the people that are coming through here. I mean, the amount of subscribers that we're getting per day, it's a lot. Like, and I don't mean like a lot by like thousands. I mean a lot for the history for our channel. We'd only get like 3 subscribers per day, 5 subscribers per day, and now we're getting like 35 subscribers per day. And you know, it's not necessarily all about the numbers, but the growth is definitely very interesting. You know, especially when you're in numbers and comes from numbers like something here is happening, and I think our community, our UVH family, the people that make this community so great, I think that's why. It's not because of just me, but it's because of the community, the family that we built here. When we all come together, I mean, it's something special. Kulik, what do you think is the bottom of the market? Kulik, I don't believe, I did tell somebody this, I don't believe in a top or a bottom, if that makes sense. I just trade support and resistance. You know, obviously the bottom is 0. It's not like we're going to go to 0. And if we do go to the 0, the market goes to 0, we're not going to be really worried about the stock market anymore. To be honest with you, you're going to be wondering where you get your next meal. But you know, with that being said, you know, right now for the S&Ps, I'm looking forward to retouch to the 2350 area if it goes down more. Resistance is currently having some troubles around the 2500 area. I would like to see it get above 2600 if you're bullish, but you know, if we break below 2350, you know, easily 2200, easily. If we stay below 2350, easily below 2200. You know, and that's obviously my opinion. So, could be Verizon, Lambos, Akuba. We like a down to earth person grinding it out. Yeah, we're all here just grinding it out every day. Who thinks Tesla will continue to drop after all the news has been released? Juan. One of my greatest pains was not shorting it at the resistance here. I passed on my own advice. Is shorting resistance. It touched resistance again. This is like the 3rd or 4th time Tesla's hit 380, and I did not short it. So now I'm just gonna wait to see if it gets down to like 250, and then I'll go long. You know, but that's how I've been playing Tesla, and it's been working out for me. So, you know, if this video was of value to you, hit the like button. It's been over an hour. Definitely appreciate every one of you. If you're new here, say hi. Join us on our Facebook group. Join us on our Discord. Definitely want to see you there. Looking forward to trading with you in 2019. You guys all have a wonderful day. It's always us versus herd. Stay safe. Stay green.